Hi there, welcome to this week midweek market analysis. So happy new year to all of us, okay? And as the first week of the year, usually things are a little bit slower, but we do see some activities coming in already. Okay, so I always highlight that whether you're actively trading or not, it's very important to still keep an eye on the market, keep yourself updated as to what's happening. So having said that, this week here on Friday, of course, we do have the NFP as well, the very first NFP for the year. If you're trading on news, just be sure to monitor if there's any huge deviation. I think that's the main catalyst to move the market. And of course, if you're looking for confluence in terms of technical setup, in line with a potential catalyst from the news itself, I do think that some of these major pairs here might give us an opportunity to do that. So start off with the dollar index over here. Okay, so the overall structure, I think not much has changed. Overall, we're still looking at this as a crawl. Yesterday, we do get a tiny little bounce off that previous bottom at 103.4, which gives us what we know as a potential double bottom. And right now, the market is basically testing the top of this channel trend line. Okay, so if what we can get over here for perhaps the next 1 or 2 days is a tiny bit of a consolidation here, then we have a very decent opportunity for a breakout to the upside with a final target at 108 for the dollar index. Okay, so keep an eye on that. Inversely, we do have the euro dollar over here as well. Yesterday we do had a tiny break to the downside, and that kind of give us that little double top formation around 1.0720. And right now, quite similar in terms of the setup of the dollar index. If we can get a tiny bit of a consolidation here, okay, of course building into Friday NFP as well. If you can see that, then we have this little impulse correction setup where we can take the breakout to the downside. And of course, some of you might look for retracement, perhaps around that 50 and 618 fib. With a final target at 1.0220. Okay, so the direction is clear. We're just essentially waiting for the ideal setup, or what we call the go-to setup, to execute the trade. For pound dollar, yesterday we did get a break below this structure here, but of course after that break we didn't really get much of a follow through. The market basically retraced back and currently is testing around that zone. Personal suggestion over here is, of course, if you have any sell trade, I would suggest to maybe take that trade off first. Instead, focus on some other opportunities that might be better, might be clearer in terms of the setup. Okay. The direction for the pound dollar, I'm still maintaining a bearish bias. Okay, we're still expecting overall for it to come a little bit lower towards 1.1775. However, having said that, of course, this is not the best setup to be involved in. Okay, but of course, having said all this, it really boils back down to your risk appetite, how you manage your trade, what's your trading plan as well. Okay, so the direction is still down, but for me, personally, I would focus a bit more on setups that are clearer. Okay, Aussie dollar had a decent break and pretty nice impulsive move, but the market kind of reacted off the bottom of the channel, came back up as a V shape. So ideally, if you have any sell trade, of course, you would have potentially managed that yesterday as well after that impulsive drop, and you would probably have gotten out at break even. Okay, because shifting stops to break even, and then the market would have tapped you out of that. Right now, the market here probably would move a little bit higher to retest that previous top. Okay, can potentially give us that double top before that drop. I think overall structure still remains very much as an impulse correction. Of course, we need more information as to how the market is going to develop moving forward from here. So overall, we're still bearish, but we want to see how the market react. Okay, around that 6835. If you can get a tiny bit of a crawl, then that will give us another potential sell to the downside with a target at 6585. Right, so this only time will tell, and we'll give it a bit more time to develop first. And then we have the dollar Canadian, right? So dollar Canadian kind of moved off quite nicely yesterday. Right now it's doing a little bit of a pullback. If we can get a decent corrective structure, something like this, towards that 50 and 618, I think more importantly, maintaining above 3510. we can continue to expect more upside from here, right? So again, it's not the biggest move yet, okay, but we do see some tiny bounce up to the upside, and if you can get something like this developing here, we can continue to expect more upside with a target at 1.3775. Okay, so most of this here we are looking at dollar strength still. Okay, of course some setups are clearer. For example, like euro dollar seems to be building up nicer. Aussie dollar, we'll probably need to give it a bit more time. Dollar CAD, if you can get a corrective structure here, we can still hold on to a bullish bias. Okay, so overall, we're still looking at dollar strength. Now, in terms of dollar yen over here, we suggest that while we are maintaining bearish bias overall because of this impulsive controlling that momentum, my suggestion here is to wait for at least a decent 3-wave pullback, potentially coming back towards 132.15 before we look for another sell opportunity. Okay, so for the dollar yen, the directional bias is clear, but the entry execution setup will probably need to be patient and give it some time. Okay, so no rush onto that. And then on gold, okay, this part here, for a swing trader, you definitely need to be very, very patient. The market structure is still very much diagonal as of now, or what we call a crawl. It's not the best time to be buying still unless the entire pattern gets invalidated. Okay, and most of the time when we see this, we always say that we want to focus on the downside, but obviously there is no sign of a reversal or a rejection to the downside yet. So you want to maintain a neutral and just be patient, right? When things are not clear, when some of these patterns are not aligned, we wait. Okay, there's no rush, there's no need to force any trade into the market. Okay, so for me right now on gold, I'm just going to maintain a very neutral and patient perspective. Give time to the market. Eventually it will develop into something that's clear, and then that's where we're going to execute our trade. Crude oil, pretty nice little pullback now. Okay, we want to give it maybe a one more day or so to see how the market is going to react around this zone. We have this here as a 1, 2, 3, and then of course here as a 1, 2, 3. It's a potential expanding flat. Very, very similar structure to potentially what we are seeing at the dollar Canadian here, 1, 2, 3. Okay, 1, 2, 3. So this is where the pattern is playing out pretty nicely. The question is how the market is going to react around this level, which kind of confluence at near the bottom of the channel too. Okay, so this part here is where you can play around with like lower time frame. Okay, if you can get a corrective structure in crude oil around that zone, then you can look for a breakout of that crawl for potential buy trade as well. Okay, so we're utilizing a higher time frame to give us that clearer confirmation and direction, and then we can of course utilize a smaller time frame for the execution phase of it. Okay, so this is on crude oil. Do keep an eye, we are already in that zone. Basically, I think give it another day, things will be clearer on it. Cool. And then we have the S&P, right? So I think S&P is starting to give us a little bit more clarity into what the pattern is potentially developing. As of now, this seems to be doing a little bit more of a corrective structure. So we have an impulse correction. We can expect one more push to the downside. And if you are trading the S&P index, do keep an eye on around 3980. If you can get a corrective pullback all the way back up towards 3918, then that would present a pretty decent sell setup. Okay, because not only we have a corrective structure, we do have this confluence of the top of the channel, a 50% Fibonacci confluence with some previous structure level here as well. Okay, so there are many reasons to look for a potential rejection or even a reaction around 3918. Okay, so keep an eye on that. If you're long-term investing into the US equities market, this also tells you maybe just be patient. There might be a little bit more downside for the equities, at least for now. Good. So all the best to your trading. That's all from me for this video over here. Okay, and of course, wishing you guys a happy new year, and let's make 2023 another good trading year for everyone over here. Okay, so with that, all the best, and I'll see you guys in the next one.